Hello and welcome to Hot Commodities, and the gold monetization special show is what we have for you today. I'm Manisha Gupta and the headlines on the show are: the cabinet approved the gold monetization scheme. People can deposit up to a minimum of 30 grams of gold with banks for at least a year and earn interest on it. Remember, the move aims to reduce the country's reliance on import of gold and to utilize idle gold with individuals and institutions. And the cabinet nod for the gold monetization scheme is a reason for consumers like you and me to cheer. The two advantages certainly are predetermined interest rates and as well as no worry of theft and loss. The cabinet also today cleared the gold bond scheme. Under this scheme, Indians can now invest in gold bonds rather than purchase physical gold. The gold bond scheme will have an annual cap of 500 grams per person, and such bonds would be issued for a period of 5 to 7 years. Show. What's your fair point? Sanjeev, getting you in the conversation as well. We've discussed the positives and the flip side of this scheme for a long time now. We have seen the final draft coming in today. The ministers have been pitching the scheme since morning. What's your sense on how much of the Indian population is ready to take part into this?
Well, it's a step in the right direction. After 16 years of sleeping on what was called the gold GDS, or the gold deposit scheme, which was initially launched in 1999. At least the government at present has seen there's an opportunity to revamp it, improve on it, and come up with a new version of it. So that's very, very positive. Also, if you look at elements as far as what you were discussing a little while back on capital gains tax, as far as the gold bonds are concerned, it clearly states that it will become capital gains tax neutral. They're working on giving the benefit of the fact that in the coming budget, they will announce that the majority proceeds of this will be capital gains tax neutral. At the same time, they're also talking about giving indexation benefit if somebody wants to prematurely liquidate the scheme. Both the schemes put together are targeting two elements of gold investments that we Indians are known for. One is the physical bars and coins, where, like I've mentioned on your channel before, the quantum of investment demand has jumped up to almost double of what it used to be traditionally at about 100 to 150 tons. It's moved up to 300 tons plus over the last 4 years, annual consumption of 300 plus tons, which is very large. And in that context, if some of that physical demand gets channelized into the gold bonds that the government is proposing, it will be a step in the positive direction, and that's what the intention is. The second element is the holding of 22 to 24,000 tons of physical gold. Like I mentioned a little while back,
isn't the number much higher from there? Because 22,000 is something we've been saying for the last decade.
I agree. But let's take a conservative figure also. And if you're talking about even 0.5% of that coming on board, that's a significant 120 tons plus. So both of the steps in the right direction. There are a few elements to be ironed out in terms of, as far as the bond is concerned, what is the interest? Is the interest exempt from taxation or not? As far as GDS, it's anyway exempt from interest, is exempt from taxation. There are issues about if it is inherited gold, which you've got through 2 or 3 generations, will there be any questions asked when you deposit that into the gold savings account? So there are a few open-ended questions. The government is aware of it. And the most important aspect is when the government has come out with these two policies, it's had a dialogue with the industry bodies and various organizations relevant to the industry, and then come out with the scheme. So they're fully in the picture as to what the issues might be going forward.
Fair point that. Soma, I want to come to you on the fact that Indians prefer to hold gold in the physical form, while of course, it has a cultural impact to it also. The other thing really is about the lower rate of interest. That is a feedback that most of the industry participants, institutions and HNIs have been giving out.
Yeah, two things. Yes, the physical gold part. Bulk of the consumers would like to hold physical, But there is a section of the market, as we have always seen, increase the consumer choices when it comes to gold. So to that extent, the sovereign bond, it's not going to be a huge issue. The government has already said in an earlier statement that they are going to limit this. It's going to be part of the government borrowing in any case. So it is going to be a certain amount, a limited quantity, and it will address the needs of specific HNI customers. So to that extent, I think it's good. It increases the consumer choice. Now, coming back to what is going to be the interest rate, again, this scheme has to be marketed well. As we have said, whether it is 1% or 2%, people have to be told that this is 2% in gold terms. Now, you don't get 1.82, you get only 1.82% on a dollar deposit, and gold is a dollar asset. So comparing this rate of interest with the the term deposit interest will not be right. So when we market the scheme also, we have to market it very carefully. I don't think a 1.5 or a 2, that range of interest, we don't know what it is, it could be higher, is a dampener, because that's what you get on a dollar deposit. So why should it be any different for gold? So the question is, it is making it a productive asset, and you are getting it in gold terms. So if the gold price goes up, you get that much more. So I don't see that as a big, so there have been lots of questions about taxation, about interest rates. That's why I have always maintained that the scheme has to be marketed very, very well by the banks. I don't see that as a dampener, an interest of that range, because it is a dollar interest.
Fair point. That is very well noted. Sanjeev, you wanted to add to that?
Yeah, one, definitely as far as returns are concerned, it has to be put into perspective. Over the last 10 years, I think the Indian household and Indian savers are looking at their investments very differently. They're talking about asset allocation, which they never spoke about 10 years back. And gold forms an integral part of its asset allocation across diversified assets. So that's where the value comes in. Whenever there's volatility in the equity markets, there's a hedge as far as gold is concerned. The second point is gold is an inflation hedge, and a currency hedge. Gold is the only alternative an Indian household has to invest in alternate to the rupee. So to that extent, there's a value investing in gold. The third point is, as far as returns is concerned, internationally the returns on gold is at this point in time less than 0.5%, and hence a 2% returns is excellent. Also, the gold, if I was buying gold today as part of my asset allocation, I would be required to take the money out from my bank account, go to a jeweler, buy some coins and keep it in the locker and pay for the locker facility. Here, I'm getting all that by without paying the locker facility and incrementally getting 2% and getting a tax exemption. So it's a win-win to that extent. The most critical point to make this a product a success, both these products a success, is an active involvement of the Indian banking sector. If they are not actively involved and they are not sufficiently induced to market this, it will not go forward. One of the recommendations that we had made out of FICCI Gems and Jewelry Committee is that the banks be allowed to treat the lending of the gold collected under the scheme to the jeweler as part of its priority sector lending. So to that extent, if it's done in the proper manner, the banks are incentivized enough to push this product, it can be a success.
Fair point. As Som was also pointing out, we still are waiting for those final notifications. Between now and October, November, when the scheme actually comes in, there would be some statement that you would see coming in from RBI as well, and that perhaps will incorporate all of that. So gold is a wealth, gold is an alternative currency as well, and now the government is giving us a very strongly banked instrument as well to put in case of gold. But we'll talk about more of that after this very short break.